Hey everyone, welcome back to the Mark Loeffler Experience. We got another great show for you today. We got Glen from Canadian Investing in the U.S. He obviously has his own YouTube channel. He's got a Facebook group. He's obviously on Instagram as well. We'll put all his links down below, but we're going to talk about Glen buying his latest property that he just firmed up on in Toledo, Ohio. Toledo is in Ohio, right?
Yeah, it is in Ohio. Yeah.
In the warm weather state of Ohio. And yeah, we're going to talk about what he bought, what it looks like, how it's going to go, what his projections are, and why he bought it. And then we're going to get into a little bit about with Glen, and maybe this episode and maybe another episode about Mark buying in the U.S. because I'm super interested in this. And now that I have Glen's undivided attention, I'm going to take full advantage for myself. Hope you guys don't mind.
Sounds great. With this property we just bought on Friday, it's different. So normally a lot of these, I wouldn't have touched this in 2020. We wouldn't have touched this property. But we've had a lot of problems acquiring deeply discounted properties as of late. My goal at the last week of December was to ideally I wanted to get 5 under contract to go into 2021 and hit it hard. And I put out went through about I don't know, 200 or 1,000, seemed like forever, properties. And we put offers on about 20 and we got zero. We got 0 properties that week. And we've just been putting out offers because sometimes even like you go, oh, wholesalers, you're dealing with wholesalers. Just because it's a wholesale deal doesn't actually mean it's a deal. So a lot of times we're like, these are our numbers. This is where we're at. And this is all we can do in order to make this work. And the difference between us and other Americans that are buying is that we need deeper discounts than the Americans are buying because our refis are usually at 65% loan to value, whereas they could get 75, right? So we need to have that much extra gap in there. We need to be buying at that much more of a discount to make the numbers work. So some of these deals that I just throw away because I'm like, I can't buy it, purchase price plus renovation, 75 cents on the dollar. That's still not good enough for me, right? I can't refi and get the partners back or the private money, all their money back. I need to go deeper.
I mean, let's be honest. I mean, it's the world over right now.
Yeah.
For that problem. I mean, there's just a shortage of inventory of everything across the board, right? And obviously costs of new builds are going up because the land's value, the land is more expensive, the material is more expensive, the labor is more expensive. The only thing that's cheaper is the money right now. So right. There's a lot of cheap money out there chasing the same goods, right?
Yes.
Anyways, I mean, I'm interested in this property, and then maybe we can go and drill down into that strategy after.
Yeah. I was just trying to give the precursor because a lot of people, if they listen to my show, they're going to go, "Wait, you bought a property for $36,000?" And you're like, "That," and like the ARV is only 65. They go, "Glen, those numbers, based on what you teach us, those numbers don't jive, right? Because normally." I need to have like a 75,000 ARV in order to get lending for Canadian, right? Usually the foreign national programs won't let you go that cheap. I found some roundabout ways to pull this off. What we did, if you want to go through the numbers, you have a little calculator here. This is awesome.
Oh yeah, look at this. So okay, so yeah, let's go through the property analyzer, and so sure. It was $36,000, right?
Right.
US dollars, right?
US dollars.
So that's like what, 4 million Canadian?
Well, right now it's not too bad. I don't know. We're trading at 1.25 or something like that.
or half a Bitcoin. I don't know. Elon just bought all the Bitcoin.
Yeah, no, I was just talking about that on my show before this, but so for to purchase this, because we changed it up, I used all private money. So I actually
so you got
more
100%.
Nope. Yeah, it's actually more than 100%, but yes.
Okay. How much?
So we borrowed, we got a loan for 44,000, and
so 44,000 is about 115.
Yeah, something like that. Yeah, and because it's covering the repairs too, like the loan will cover the repairs. Yeah.
Okay, let's just do 125 then. Okay, so obviously that covers the repairs in there. So I'm assuming because it's in Ohio, there's no land transfer tax.
No, that's land transfer tax is an Ontario thing. I don't even think any of the other provinces have it, do they? I think it's an Ontario only thing. And then Toronto transfer tax is the double of Ontario tax, and you're just like, I think it only exists in Ontario.
Yeah. So, okay, did you pay for an inspection on this property?
No, we had my contractor walked it, so I didn't have to pay for that. And but we're doing $8,000 in renovations, but that's in that price that we're paying, right? Already. Yeah. So, and I don't know how you want to work that out, but it's weird.
So, like, I'll put immediate repairs and renovations. I'll just put a negative $8,000 there, so it doesn't show up twice. That's all.
Okay. Yeah.
Well, actually, no. It's already showed up there. Look at that.
Yeah. So
I'm smart. So, appraisal.
We had the appraisal. The buyer did the appraisal, so it didn't cost us anything, but we do have an appraisal at 65 on the property.
But you didn't have to get that.
I didn't have to pay for it. No.
Any financing cost fees on the first mortgage there?
No, not on that one.
Closing costs like lawyer or.
I think we ended up working out to about $700. I think we ended up charging 36,700. I think was the closing, something around that.
So you're literally 700. Your closing costs out of pocket right now.
Well, no, everything is included because we're doing 36 purchase and then 8,000 reno, so that's 44, and then 700. So we're still under the 45.
Oh, so you actually had $45,000 in loan?
Yeah, we got a $45,000 loan.
Oh, that makes sense. That's easy then. Okay.
Yeah.
We're going to talk after repair value after, but what's your gross rents on something like that?
So with this, there's two strategies layering on this, but the gross rent is $750 is what we're renting it for, is the purchased gross rent. So that will, like, because we're layering on a lease option, so it does change all of that, but just to make it nice and unsimple.
So you're selling this as a lease option?
Yes. Yeah.
Okay.
Yeah. But the current rent is $750. That's what we bought it with, $750 of rent.
Okay. What would it be after renovation?
We're gonna move it up to $950.
$950. Let's just use $950.
Okay.
So if you guys are doing the math, obviously this is greater than 10%, right? Or the 1% rule.
Yeah, it's around the 2% rule.
Yeah, it's around the 2%. Well, it's more than the 2% rule.
Yeah.
Like even just on purchase price, like this, obviously. All right.
But the thing is, you don't make a lot of money on it. When you get to the bottom, you'll see the cash flow, and you go like, "That's not super sexy." The difference is that you're not actually putting much money in either. Right.
So yeah. All right. So heating costs.
That's tenant.
Tenant. They pay all the utilities.
They pay everything. It's a single family house.
Yeah. What's your property taxes on that?
Looked this up beforehand. $773 a year.
773. Yep. All right. It's pretty expensive for 35,000.
Yep.
What's your insurance on something like that?
$519.
519. All right. Property management.
8%, which
yep.
I can figure that out.
$72.20.
Yep.
All right. Repairs and maintenance. What do you put in for that?
Yeah, normally I put 5% and 5%, but in this case, we actually have it guaranteed because the contractor will guarantee their renovation for 12 months. So we actually have none, but on this one, but normally it's 5%.
Yeah, we'll just put it at 5%. You know, fridge goes or stove goes or something, right? So
yeah, well, honestly, what we do is we usually don't provide fridges, stoves, or anything. The property manager will have like a package that they can sell to them on top of that, and it actually works in everyone's favor. So for my favor, there's less mechanicals to fix, right? Yeah. From the property managers, it's an extra stream of cash flow from them, right? And from the tenants, they get brand new appliances instead of dealing with old crap that I've given them, right?
Yeah, for sure. Okay. And then any other things like water take rental, laundry, anything like that?
Nope.
Owned, which of course, why not? What's the vacancy rate like there?
Well, with this one, we're doing a lease option, so there's going to be zero vacancy because they're going to buy the house, right?
Yeah. Well,
So,
I mean, listen, let's be honest.
oh yeah, I know.
Even the best people who have like the best systems and the best models, two out of three people will buy,
Yeah. So
right?
honestly, I don't know what the vacancy rate is in Toledo. This is actually my first property in Toledo.
Okay.
I'm like usually in Dayton or in northern Florida or Huntsville, Alabama, or Indianapolis or KCMO, but this is my first.
And then we're going to talk a little bit about like finding the properties and that too, because I'm a little interested in that. So obviously you got $45,000 was your everything. What like is it interest only, principal and interest, mortgage,
Interest only. It's because it's private loan.
private loan? Yep. And what's your rate on that?
10.
So even with a 10% private loan, you're cash flowing on this thing $300 a month.
Sounds about right.
Yeah. So even if you don't do anything, you're cash flowing $300 a month. Your cap rate is 22.5% cap rate.
Yeah. So this is actually like because what we're doing is with the lease option. So what we're renting it at day one, it's at 750. We're gonna do a renovation. We're gonna switch it to 950 as a lease option. We already have an appraisal at 65. We can then sell the property for 65 to 75 as a lease option in 3 years. And then we'll, as you see, we're charging an extra thing. We'll give $100 credit back to the tenant, and we'll charge a deposit on the setup, which is usually we'll probably get usually for this. Usually we want $5,000, but like for this cheap of a property, it'll probably be like $3,000, something like that. And then that's how we kind of layer it on. I don't know how you work all that in there.
I don't know. Let's try here though. So.
Yeah, because when we roll into the second loan in usually between month 3 and month 6, we will go into a lower interest rate. We'll go down to 5.7%, and we'll so just to make it really muddy.
Well, I get that. So you have your $65,000, right?
Yeah.
I'm assuming that's after renovation, your appraisal. That's where you're going to get financing on.
Yeah, it'll be 80% of 65 is we already have an appraisal at 65, so 65 or higher. Yeah, so somewhere in there. So it will perfect BRRRR is what we're looking for.
We'll call it 70. So are you actually going to get 80% of it, or are you going to get less? Or
the lender said they guarantee us 75 and to run our numbers at 75, but they said often they can get 80.
Okay, so we'll use 75.
Yeah.
All right, so there was no land transfer tax. You had 53,000 or 45,000 down payment. Oh yeah, it was a full mortgage, right? So the down payment was 0.
Yeah, down payment was 0.
8,000, but again, that was already included in the first mortgage. That was included in the first mortgage. That was included in the first mortgage. This was included. Any costs associated with like doing the new mortgage? Like $500 or something. I don't even know what they're in there.
Yeah, there'll be some fees to set that up. It's usually not cheap. That's the biggest fee out of everything. It's usually going to be like $2,500 as an origination fee, and there could be points on top of that. So yeah, it could be up to $5,000 to set it up. That's the expensive part is the refi, but. But it's a way to, if you're trying to do this over and over again, it's a way to get the private money paid off quickly and back to them, right? And then you can repeat.
So you're basically, after all said and done, you're going to get $2,500 US.
Something like that. Yeah. And we have none of our own money in it, which is not like for some of these, you go, well, there's advantages as you get into these really cheap properties. The 1% rule gets way stretched, right? And certain things get stretched, but your cash back is going to be a lot lower. Like for some of the ones where we're doing the duplexes, where we're buying them for like $17,000, doing a $50,000 reno, and then getting them appraised for $150, we're getting like chunks of $20,000 back after all the fees. But the thing is, they're just getting so hard to find. It's like they're harder than needles in haystacks to find.
So we'll say 950. This is all covered. So you still have what was the property taxes again?
773.
And the insurance was 519. So you're still paying a property manager on a lease option, is that correct?
Yes, the fee for when it switches to a lease option does go down. So usually we pay like 8% when it's a rental, and it usually drops down to four, usually four, sometimes five when you're doing a lease option because they're no longer in charge of repairs and other things. We put that on the tenant once it
Yeah,
changes to a lease option or a land contract, depending which way you want to go.
we'll put 5 in there. Okay, so what's you're gonna have 0 vacancy because it's gonna be first mortgage payment is gonna be what rate do you think?
On the refi,
Yeah,
5.7.
which is obviously high in Canada, but
Well, it's also like it's even high for the U.S. But the thing is
yeah.
that it's well, you got to remember, like we're not Americans, right? We like even if an American came to Canada, they're not getting an interest rate at 1.5% or 2%.
Mhm.
They won't be qualified for that. You have to go into a different loan programs, and you're often dealing with commercial lending. And then when you deal with commercial lending, the problem is that the properties are too cheap for commercial lending. So it's
Yeah,
this back and forth game to find something that fits in there, and then you have to pay extra. That's where you get all these extra setup fees because you're getting into difficult things to finance, right? When you're getting cheap properties and you're foreign national and all that stuff.
yeah. So I mean, here's the thing though, like so you bought a property, $36,000, Toledo, Ohio. You have 0 money in from the start. Um, like they're basically financing 100% private money, and then if you get 80% of your 70,000, it's 56,000. So you're actually pulling out $6,000 after fees, right?
Yep.
And you're going to get $150 a month cash flow. That's taking into account that you're giving them $100 a month as a credit.
Yep.
So it's actually 250 if you really want to look at that. Plus, they're giving you a deposit to hold.
Yep.
So if it's $2,500, so let's call it 4,000 because whatever, and then that will
Yep.
give you $10,000 up front. Then you can sell this property in 2 to 3 years to them for 75,000,
Yeah.
80,000.
Yeah,
Yeah.
whatever they are comfortable with, but yeah, at least over 65 for sure.
Mhm.
Yeah, over
So
the
I mean,
appraised price. Yeah.
like you're getting it, like even with the cash back, you're getting a 10% cash on cash return. I mean, the mortgage pay down is going to be different just because they calculate that a bit differently in the states. Is a 25-year, you'll have a 30.
Yeah.
Um, but
You're not making much money on that.
and then the appreciation is probably going to be like 1.5% or something like stupid like that, right? Like it's not
But
going
the
to be
thing is,
very
we're not
much.
really making any appreciation because we're
Yeah,
setting it as a lease option. So there's a determined exit.
yeah.
So
There's
there's
determined
no
exit.
real, it doesn't matter if it appreciates or not because we already have the exit set.
Yeah. I mean, yeah. So I mean, it's obviously it's a little bit of a unique deal for you guys. You're in Toledo. This is your first deal in Toledo. So
Yeah.
let me ask you this then. You're buying in an area that this is new. So
Yeah.
like, do you find a new property manager? How are you sourcing the deals? Let me just stop sharing screen here,
Yeah.
and then
So this one's a unique deal. So my property manager is actually the current property manager of this property. And what happened was somebody else was buying this property from, so we'll still call him the seller, and some other buyer was buying the property. And they actually worked out some sort of deal that they could start the renovations ahead of time. So they've done like 80% of the renovations already. And basically, the person couldn't close. So
mm,
they stuck the money in, but they didn't pay the contractor. So the contractor was basically came to me. The property manager came to me, and they said, "Look, if we can sort all this out and make sure that everyone's going to get paid, even on a payment plan or something else, we can keep from suing everybody." So I'm a problem solver. I came in and I gave them a nice low offer. This is what it's going to take for me to put this together so that I can pay off this contractor with payments and pay off. I don't have to necessarily pay that $8,000 renovation right off the bat, and I can pay off all the different pieces and I can make everything right. But I need a discount in order to pull this all together for everybody. And everyone, all the sides were happy with that.
your property manager works obviously in Dayton, Ohio. They work in Toledo, Ohio. It's actually not that far apart.
No,
Is
they're
that
not that
is
far
that
apart. Yeah.
so? You have different property managers for different areas because you said you invest in Northern Florida. Alabama, Ohio, where Kansas City, Missouri,
and Indianapolis.
and
But
Indianapolis. Yeah.
my 2020 goal is actually to shrink, not so many markets, right? So not so
Mm.
many property management portals, not so much stuff. Um, and so we're actually unloading Kansas City, Missouri, and we're unloading Indianapolis. So hopefully by the end of 2020, I won't own anything in either of those places.
And you
They're
did
both really good
29.
market.
Yeah,
Go ahead.
you did 29 deals last year, right?
Yeah, but we're
So by the way, if anybody's watching this and wants to buy some stuff in Kansas City or Indianapolis, I'm sure even though Greg's selling, it's still going to be great cash flow. So,
yeah.
maybe
Well,
hit him up.
it would be better. Like I'm not going to say that. Oh, this is going to be your be all end all perfect burr right off of my thing, but it is all set up and it is all running, and it will we will sell it at a better price than if you're buying turnkey. Like I'm not gonna, you're gonna make your best returns doing your own and renovations. No one's
Yeah.
anyone who tells you anything else is lying to you.
Yeah, of course.
But like
It's the same here, right? The way to
exactly,
get in is to burr. So,
exactly. But we do like we are looking to unload these two markets, and it's not that there's anything wrong with the markets. It's that there's too many moving pieces. There's too many people, and it's just I was reading books, and it's all about like going deeper instead of wider. And it's just instead of having so many different places, just be someone who's very important in a market instead of having 10 here and 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 10 here. It'll be much more. You're much more powerful to have like 50 in one market,
yeah.
or in a couple markets than being so spread out. So, and that's one of the things we're doing.
Yeah. So okay, I mean that's a pretty cool deal you just did in Toledo, and that's why I reached out to you. But so talk to me a bit about like the duplexes and that you're doing. Is that mainly what you're doing? Is it small multis, the duplex, triplex type thing, or?
You know what? Like we're open to everything. That's why it's really hard when we talk to wholesalers. Like, what are you willing to buy? I'm like, well, what I want is 65 cents on the dollar, including renovation. That's what my minimum deal requirement is, right? It's because I need that usually for the refis. If I'm refining at 65, I need to be able to perfect burr. Maybe even if I have to leave fees in, that's okay. But I want it to be basically a perfect burr minus some fees. What were we talking about? I just got not sidetracked on that.
Oh, we're talking about like what kind of deals you're looking at.
Yeah, so we do buy single family. At this point, we've like all of those deals we were doing in 2020 were all 4 units or less. But it wasn't that we were like stuck on the 4 units. Like we could go higher. Like out of those deals, we did 2 fourplexes, 2 duplexes, and the rest are all single family. And I am interested, and my goal is to get something bigger in 2021. The problem is I've created my own trap, and I've promised like returns, quick money. Like we'll do a refinance quick. The problem is that you go buy a 30 unit to renovate 30 units and then do your refi. That's not a 6-month thing. You can't turn them that fast, right? So it has to change the mindset of people who are working with me. That like it's going to take like 2 or 3 years to get through renovating all these, because it's like you can do all the vacant ones quick, but just moving people around or doing evictions or doing whatever to get through all these units, it just can't be done really fast.
Oh, I mean, and trust me, I know.
Yeah.
So all right. So like, and in the different states you're working in, is there different landlord tenant rules, or is there basically?
Yeah. Well, we've picked all pretty landlord friendly states,
Okay.
like Florida. Like he wanted to like list like usually the top 5 or 6 that always come up on everybody's list for the top landlord friendly states would be Michigan, Florida, Georgia, Texas, Colorado, and I think I'm missing one. Oh, Missouri. It'll show up, right? Those will be like on like if you look, just Google it, the list. Those are the ones that keep coming up. But it's like, what is the difference between the good and the bad and the middle? And you're like, sometimes it's just like the length of it to do an eviction, right? Like sometimes like Texas, you can do an eviction really fast. You can have them out of the property in like a week or 2, right? Whereas it might take the 30 days. You might have to wait 30 days in certain states, right? So there's still
anything under 9 months seems like a pleasure.
Yeah. So it's all about you don't need the perfect ones, but you need something like ideally when I was, because I was an Ontario investor, right? And to go there, what was important to me is to avoid the landlord tenant board, right? Like I used to
Mm.
go there all the time. I spent so much time over at the Kitchen Rod, because that's one properties are all over in Kitchener and stuff. But over at that Kitchen Rod doing those landlord evictions and everything else, and I just was, I was tired, and
Yeah.
I picked places where I wouldn't have to do that, or at least if I had to go to a trial, that the precedent is in the favor of the landlord. Like if this happens, this is what will happen, and it's more favorable.
Well, I mean, all I want as a landlord is this is the rules. Everybody abides by these rules.
Yeah.
That's all I want. Then as long as I know the rules, I can choose whether to invest. It's now, anyways. We're not going to get into that. Like I can go down. I've done down that rabbit hole on a couple videos. We don't need to do that here.
No,
But
no.
Glenn, you know what? Like it's super interesting to me, like the deal that you just put together. Congratulations on keep moving forward. I know it's getting harder out there. It's harder here too. But yeah, like just keep moving forward. If you guys want to check out Glenn, we're gonna put his link down below. I know I'm gonna be watching a lot of that too because I'm super interested in diversifying and moving out of the Ontario marketplace at this point. And so guys, when I go there, I'll definitely be shooting some videos, letting you know what I'm looking at and where we go from there. Glenn, thanks so much for joining us again. Everyone, smash the like button for the YouTube algorithm. Check out Glenn's channel. We'll see you in the next one.
Thanks, guys.